Welcome. Today, we're diving into one of the biggest financial decisions many people face. Should you buy a house in 2026 or continue renting? With the real estate market constantly evolving and economic factors shifting, it's natural to feel uncertain about which path to take. In this video, we'll break down the key considerations, from market trends to personal finances, and help you make a more informed choice. Whether you're a first-time buyer or a seasoned renter, understanding the pros and cons of each option is crucial. Let's start by looking at the current housing landscape and what's expected in the coming years. The housing market in 2026 is predicted to be shaped by several factors, including interest rates, housing supply, and economic growth. Experts suggest that while prices may stabilize compared to the recent surges, affordability remains a concern in many regions. Mortgage rates are expected to fluctuate, influenced by central bank policies and inflation trends. For renters, rental prices may also continue to rise, but at a slower pace. It's important to keep an eye on local market conditions, as real estate is highly regional. Let's explore how these trends might impact your decision to buy or rent. Interest rates play a pivotal role in determining whether buying a home is financially viable. When rates are low, monthly mortgage payments are more affordable, making homeownership attractive. However, if rates climb, borrowing becomes more expensive, potentially pricing some buyers out of the market. In 2026, experts predict moderate fluctuations, so locking in a favorable rate could be beneficial. For renters, interest rates indirectly affect rental prices, as landlords may adjust rents to cover increased costs. Understanding how interest rates influence both buying and renting is essential for making a smart decision. Supply and demand are fundamental forces in the housing market. If there are more homes available than buyers, prices may drop or stabilize. Conversely, limited supply with high demand can drive prices up. In 2026, new construction and government policies may influence supply, but urban areas could still face shortages. For renters, high demand can also mean increased competition and higher rents. Keeping track of local housing inventory and demand trends can help you anticipate price movements and make a more informed decision about buying or renting. Before making any decision, it's crucial to assess your own financial health. Consider your income stability, savings, debt levels, and credit score. Buying a home typically requires a down payment, closing costs, and ongoing maintenance expenses. Renting, on the other hand, usually involves a security deposit and monthly rent, with fewer upfront costs. Take a close look at your budget and long-term financial goals. Are you prepared for the responsibilities of homeownership, or does renting offer more flexibility for your current situation? One of the biggest hurdles for homebuyers is saving for a down payment. Most lenders require at least 10–20% of the home's purchase price upfront. In high-cost areas, this can be a significant amount. Some programs offer lower down payment options, but they may come with higher interest rates or mortgage insurance. If you're considering buying in 2026, start planning early to build your savings. For renters, the upfront costs are generally much lower, making it easier to move or adjust your living situation as needed. When comparing buying and renting, it's important to look beyond the monthly payment. For homeowners, the mortgage payment includes principal, interest, property taxes, and insurance. There may also be homeowners association fees and maintenance costs. Renters typically pay a fixed monthly rent, with utilities sometimes included. Comparing the total monthly outlay for each option can help you understand which fits your budget better. Remember, homeownership often comes with unexpected expenses, so it's wise to have a financial cushion. One of the main advantages of renting is flexibility. If your job or lifestyle requires frequent moves, renting allows you to relocate with minimal hassle. Lease terms are usually shorter than a mortgage commitment, and you're not tied to a specific property. This can be especially valuable if you anticipate changes in your career, family, or personal life in the next few years. Renting also means you're not responsible for major repairs or maintenance, which can save time and money. Buying a home offers stability and the opportunity to build equity over time. As you pay down your mortgage, you increase your ownership stake in the property. Homeownership can also provide a sense of permanence and community, allowing you to personalize your living space. However, it comes with long-term financial commitments and responsibilities, such as property taxes, repairs, and upkeep. If you're planning to stay in one place for several years, buying may be a smart investment. Homeowners are responsible for all maintenance and repairs, from fixing a leaky roof to replacing appliances. These costs can add up quickly and require both time and money. Renters, on the other hand, typically rely on landlords to handle repairs, which can be a major convenience. When budgeting for homeownership, it's wise to set aside funds for unexpected expenses. If you prefer not to deal with maintenance issues, renting may be the better choice for you. One advantage of homeownership is the potential for tax benefits. Mortgage interest and property taxes may be deductible, reducing your overall tax bill. However, recent changes to tax laws have limited some deductions, so it's important to consult a tax professional for the latest information. Renters generally do not receive these tax breaks. Understanding the tax implications of buying versus renting can help you make a more informed financial decision. Equity is the portion of your home that you truly own, and it grows as you pay down your mortgage or if your property value increases. Building equity can be a powerful way to grow your net worth over time. Unlike rent payments, which do not contribute to ownership, mortgage payments gradually increase your stake in the property. This can provide financial security and options for the future, such as borrowing against your home or selling for a profit. Renting typically requires less money up front compared to buying a home. You'll usually need to pay a security deposit and the first month's rent, but you avoid the large down payment and closing costs associated with purchasing. This makes renting more accessible for those who haven't saved enough for a home or who want to keep their cash liquid for other investments or emergencies. One downside of renting is the potential for rent increases. Landlords may raise rent at the end of a lease term, sometimes significantly. This can make budgeting difficult and may force you to move if the new rent is unaffordable. Homeowners with fixed-rate mortgages enjoy stable monthly payments, providing more predictability. If long-term stability is important to you, buying may offer more peace of mind. Renting offers mobility, making it easier to move for work, family, or lifestyle changes. Buying a home, on the other hand, helps you put down roots and become part of a community. Consider your long-term plans. Do you see yourself staying in one place for several years, or do you anticipate needing to move? Your answer can help guide your decision between buying and renting. Inflation affects both renters and buyers, but in different ways. For renters, inflation can lead to higher rents over time, eroding your purchasing power. Homeowners with fixed-rate mortgages are protected from rising housing costs, as their payments remain the same. However, other expenses like property taxes and maintenance may still increase. Understanding how inflation impacts your housing costs can help you plan for the future. Real estate has historically been a solid long-term investment, with property values generally increasing over time. However, markets can be unpredictable, and there's always some risk involved. Renting does not offer investment returns, but it can free up cash for other opportunities. If you're considering buying as an investment, research local trends and consider your risk tolerance before making a decision. Your lifestyle plays a big role in the buy versus rent decision. If you value customizing your living space, gardening, or making long-term improvements, homeownership may be appealing. If you prefer convenience, amenities, or the ability to move easily, renting might be better. Think about your daily routines, hobbies, and what matters most to you in a home. If you're planning to start or grow a family, your housing needs may change. Buying a home can provide stability and space for children, pets, or aging parents. Renting offers flexibility if you're unsure about your future plans or anticipate changes in family size. Consider how your housing choice aligns with your long-term goals and family needs. Stable employment and reliable income are essential for homeownership. Lenders look for steady job history and sufficient income to approve a mortgage. If your job situation is uncertain or you expect changes, renting may offer more security. Evaluate your career prospects and how they might impact your ability to afford a home in the coming years. Your credit score plays a significant role in qualifying for a mortgage and securing favorable interest rates. Higher scores can lead to better loan terms and lower monthly payments. If your credit needs improvement, renting may be the better option while you work on building your score. Check your credit report and address any issues before applying for a mortgage. Beyond the mortgage, homeownership comes with hidden costs like property taxes, insurance, maintenance, and repairs. These expenses can add up quickly and catch new homeowners off guard. Renting typically includes fewer surprise costs, as landlords handle most repairs and upkeep. Make sure to factor in all potential expenses when comparing buying and renting. Many rental properties offer amenities like gyms, pools, and security, which can enhance your lifestyle without extra cost. Homeowners may need to pay for these features separately or invest in upgrades. Consider what amenities are important to you and how they factor into your housing decision. Over time, homes can appreciate in value, potentially leading to significant financial gains for owners. However, appreciation is not guaranteed and depends on market conditions, location, and property upkeep. Renting does not offer this potential, but it also avoids the risk of property value declines. Weigh the potential for appreciation against the risks before deciding. While home values often rise, they can also fall due to economic downturns, neighborhood changes, or other factors. Depreciation can leave homeowners owing more than their property is worth. Renters are insulated from this risk, as they don't own the property. Understanding the risks of depreciation is important when considering a home purchase. Renting can be a good option for those with less than perfect credit. Landlords may have more flexible requirements than mortgage lenders, making it easier to secure housing. This flexibility can be helpful while you work on improving your credit for a future home purchase. Owning a home can bring a sense of pride and accomplishment. It allows you to personalize your space, invest in improvements, and create a lasting legacy. For many, homeownership is a key milestone and a source of emotional satisfaction. Consider how important these factors are to you when making your decision. Renting often means a simpler lifestyle, with fewer responsibilities and less stress about repairs or property values. If you prefer to focus on other priorities, such as travel or career, renting can free up time and energy. Simplicity can be a major advantage, especially in fast-paced or uncertain times. Trying to perfectly time the real estate market is difficult, even for experts. Prices and interest rates can change quickly, and waiting for the perfect moment may mean missing out on opportunities. Focus on your personal readiness and long-term goals rather than trying to predict the market. Renting provides flexibility in case of emergencies, such as job loss or family changes. Lease terms are generally shorter, and you can move more easily if your circumstances change. Homeowners may face challenges selling quickly or may incur losses if forced to sell during a downturn. Owning a home often leads to deeper community involvement. Homeowners are more likely to participate in neighborhood events, local government, and community improvement projects. If building strong local ties is important to you, homeownership can provide a sense of belonging and connection. Renting is often the best option for those who want to live in urban centers, where home prices may be prohibitively high. Rentals are more available in cities, and you can enjoy proximity to work, entertainment, and amenities without the burden of a large mortgage. As a homeowner, you have the freedom to renovate, decorate, and truly make your space your own. From painting walls to landscaping the yard, customization is a key benefit of owning. Renters are usually limited in the changes they can make to a property. If personalizing your home is important, buying may be the right choice. If you're unsure about your long-term plans or expect to move within a few years, renting is usually the better option. It avoids the costs and complexities of buying and selling a home, and you won't be tied down by a mortgage. Renting offers the flexibility to adapt as your life changes. Owning a home can be part of building a legacy for your family. It's an asset you can pass down to future generations, providing financial security and stability. If leaving something tangible for your loved ones is important, homeownership offers this opportunity. Renting can support a minimalist lifestyle, with less space to fill and fewer possessions to manage. If you value simplicity and want to avoid the responsibilities of homeownership, renting can help you focus on experiences rather than things. As a homeowner, you have control over your living environment. You decide on renovations, pets, and how you use your space. Renters are subject to landlord rules and may face restrictions. If autonomy is important to you, owning a home provides more control. Renting makes it easier to share housing with roommates or friends, reducing costs and increasing social opportunities. Homeownership can be more complicated if you want to share your space, as mortgages and ownership responsibilities must be clearly defined. Owning a home gives you more freedom to have pets without restrictions. Many rentals have strict pet policies or additional fees. If having pets is a priority, homeownership offers more flexibility and control over your living situation. Renting can help you save money in the short term, especially if you're not ready for the financial commitment of buying. Lower upfront costs and fewer responsibilities mean you can build your savings or invest elsewhere while keeping your options open. Over time, owning a home can contribute to long-term wealth through equity growth and potential appreciation. It's a forced savings plan, as each mortgage payment increases your ownership stake. If building wealth is a key goal, homeownership can be a powerful tool. Renting offers greater financial flexibility, allowing you to allocate resources to travel, education, or investments. Without the long-term commitment of a mortgage, you can adapt your spending as your needs and goals change. This flexibility can be especially valuable in uncertain economic times. Equity is a core concept in the buy versus rent decision. It represents the portion of your home's value that you truly own, calculated as the difference between the property's market value and the remaining mortgage balance. Building equity can increase your net worth and provide financial options in the future, such as borrowing against your home or selling for a profit. Opportunity cost refers to the benefits you give up by choosing one option over another. When deciding whether to buy or rent, consider what else you could do with your money. For example, the funds used for a down payment could be invested elsewhere, potentially earning returns. Weighing opportunity costs helps ensure your decision aligns with your financial goals. Ultimately, the choice between buying a house in 2026 or continuing to rent depends on your personal circumstances, financial health, and long-term goals. There's no one-size-fits-all answer. Take time to assess your readiness, research your local market, and consider both the tangible and intangible factors. Whether you choose to buy or rent, making an informed decision will set you up for greater satisfaction and financial security in the years ahead.